Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Mark, happy Friday. We were together physically with Sachin and some of our friends at Fairfax yesterday, and now we're back digitally on Fridays for Digital
Absolutely,
Current.
absolutely doing great. It was great to be together physically yesterday up in DC and made it back. And I'll do the quick. So we'll just say happy Bitcoin Friday. So I got the orange going. And I do have
Excellent.
the orange. I do have the orange pants, and I put on the bull sock game, not necessarily because we're in a bull market, but we all hope that the bull market's back, and we'll talk a lot about this. And just so people aren't confused, the fact that I have a green top and orange bottom does not mean I'm rooting for Miami. It does not mean I think they're going to win. I probably lean that way. I have nothing against IU. In fact, I'd probably rather have an IU win since Notre Dame's the last team to beat Indiana. But I think it should be an interesting game. I do love the fact, this is interesting. So Notre Dame in the 40s, the late 40s, went 4 years undefeated and won 3 national championships. Now, how did they do that? Well,
unbelievable.
The coach went to Europe during the war and got all these guys from Army and Navy to come back. And they basically had a team of 25-year-olds who then became 28-year-olds. And I say you can't do that anymore except BYU, ha, ha, ha. But now you can, because the average age of Indiana is 25. They're actually older than one of the NFL teams. I can't remember which one it is, but the average age of one of the NFL teams is actually lower than the average age of Indiana. And I think that's what the transfer portal and NIL has done. It's turned it into the semi-pro league. And, if you have a team of men, not boys, not 18-year-old boys, but 22 to 25-year-old men, I think you have an advantage. As we have seen, they have been dominant. They've been dominant.
Absolutely. As we said yesterday, Mark, go figure. If you're in a sport where you're prioritizing speed and strength, the age has a factor, as it does in hockey in the minor league. So, by the time we record this next week, we'll have a new national champ. I'm glad, and so is the rest of our audience, to hear that you at least know what's going on in the college football playoffs, even though Notre Dame was
unceremoniously left out. I just realized you're wearing the Indiana Crimson and I'm wearing the Miami Green. So together, we're going to pick the national champion for Monday.
Yeah, that's right. That's a good call. It's a good call. And as we kind of look towards that, we'll see, Mark, if Bitcoin will be at the 6-figure mark at the time of kickoff, because we were talking a lot about how this is really the month, right, Mark, where we start to see, can we set up things for what will be going on in the rest of the year, as a lot of these call options are kind of sitting at the 100K mark. And we saw those numbers start to trickle towards 97 this past week. And you start seeing a lot more activity on the ETF side and boost in volume. And of course, the headlines are going to headline, and that'll kind of drive a lot of the macro activity. But let's say you, Mark, in the world of Bitcoin this week, now that we're kind of seeing this settling pattern in the 90s, where we kind of have this saran wrap at 100K. And that's what we mean by, will the price action get tested? Because if we break that, it can set things up for the rest of the year.
I said, the reason I wore the bull market bull, or the Bitcoin bull sock game today, is more for the island. Like, it's so cold everywhere. Like DC was freezing. It's freezing here in North Carolina.
Super cold.
And so we're all wishing we were, chilling on an island somewhere. And look, in the last week, since, we were together, the Bitcoin's up about 6%. In the last month, it's up about 10%. And from the trough, it's up closer to 16, 17%. So there are those who say the bull market's back, that the 4-year cycle is dead. We're no longer in a bear market. Now, I am not 100% convinced. I think as you said, the saran wrap on top of the 100K mark, lots of futures activity around that level. A lot of people who still want to be short. I will say a couple things that are interesting. So one is the CME volume, the futures volume, did drop precipitously. So there was a lot of shorting going on last year. And that shifted a little bit here in January. So that's interesting. Now, we haven't seen the inverse with a lot of long activity, but we did see a little bit. And so that's one. Two is there's still a handful of people out there who are saying, look, this is just a bear flag. This is a typical false rally, and we're heading for lower lows, and by September this year, we're going to be scraping down in the, one guy's predicting 32K. I think that's misguided for a couple reasons. He's basing that on the fact that, we went from 69 to 15, and he's like, well, 126 is kind of 2 times 69, close-ish. So 32 is double 15. I'm like, well, yeah, but history rhymes, but it doesn't exactly rhyme if there's not as much leverage that needs to be unwound. So my guess is the downdraft, even if it's still to occur, is going to be significantly lower. I think, generally speaking, the bigger story right now is what's happening with this Clarity Act. And I wish I could come up with a clever name, for all the letters in clarity, because this thing has turned into a nightmare, like literally a nightmare for what we all got into this for. Like, what digital assets, and particularly Bitcoin and stable coins, is the antithesis of what they're trying to do with this Clarity Act. And I'm actually pretty disappointed, and I would say this to her face if she were to, be our guest. Senator Lummis, who I thought was our friend and champion, has totally flipped and gone totally. She's been supporting this Clarity Act bill. Like, the CEO of Bank of America is like saying the quiet part out loud. He's like, well, we can't have that because that would drain deposits from the banking system. And people are like, well, why is that bad? They take their deposits where they're getting zero interest, like literally 0.7% in checking and like 1.4% in savings, into a stablecoin where you might get 3, 4, 5%. It's like, well, right, but those are our profits. My mind just like and look, I should like Moynihan. He's a Notre Dame law grad, which is not a Notre Dame undergrad, so we have to separate those. They're not the same. I mean, it's in South Bend, but it's not the same. And so I should like him, but that's a wrong statement in every way. That's basically saying, yeah, we abuse our clients and we make money off of their money, so we don't want that to end. And so I'm against, a better form of innovation. So I'm struggling a lot with how badly the narrative shifted. And look, I can go deep dark into Sinister Saturday on all of the AI data centers and all of the permissions and all of the digital currencies that would be permissioned starts to become a digital gulag, right? And that's a world I certainly don't want to live in.
Yeah, and I think, she's joined also by Coinbase CEO Brian Armstrong, who had a really poignant quote here, Mark. He said, "We'd rather have no bill than a bad bill." And I think this kind of shows how far we've come, where we were crying for no regulation for a long while and kind of keeping out of the Web3 devices towards, no, we need legislation, to now, no, we need better legislation. And I think, this is something where, this is also Brian's evolution, right? Now he is a public company CEO and he's got a seat at the table to be able to kind of influence some of these things. But I think one of the key things, in addition to everything you said, Mark, is just the clarity that the Clarity Act was supposed to provide as far as the federal regulatory agencies are going to be responsible for crypto. And Mark, maybe that's something that we have lost sight of, because we've had a very pro-crypto administration that a lot of things and movements and M&A and IPOs have been happening. But let's see what will happen in a year or in 2 or 3 years. We might be in this limbo about, okay, now who is responsible for what? And I think kind of creating some of a baseline could be an important, maybe less sexy thing to have in this bill. But I think that's one of those things where that had been really the thing that was required to advance progress.
Yeah, but see, I just think it's so much darker in the sense that look, we weaponized the dollar in 1944 with Bretton Woods, and then again, really in 71 when we cut the deal with the Saudis and turned it into petrodollars. And so we can sanction people, which I would say it would sound less good if you called it starving women and children, right? If you said, we're going to starve the women and children of Iran, or we're going to starve the women and children of, Iraq, most people wouldn't support that, right? But if we put sanctions on them, then everybody is supportive. But it's the same thing. It's basically weaponizing the dollar. And what just happened with Venezuela is it should make you very, very afraid. So we all think stable coins, well, those are good things, right? We can move money instantaneously. Right. We don't need permission. Okay, so what did the Genius Act do? Well, the Genius Act said, well, a stable coin is really only good if it's backed by U.S. treasuries or U.S. dollar. Wait, that means it's just a digital form of the U.S. dollar. So it's digital petrodollars. Oh, okay. So someone in Venezuela says, I don't want the bolivar because it's, getting destroyed because of sanctions. So I'm going to change it into stablecoins. I'm going to buy some Tether. Okay. Well, now they just seized all of the Tethers. Like, whoa. How did you do that? Well, Tether just said, here you go. Like, that's centralization writ large. That's not decentralized. That's not independent. That's not hold your keys. They're your, hold your keys, hold your coins. I mean, that is bad. And, they're pressuring Coinbase and Brian to kind of do the same thing. Like, hey, we don't like the fact that Yusko guy has some Bitcoin. We want that. We think he owes it to us. So turn over his keys. Yeah. Like, wow, why? Well, hold on. So if you look at regulatory capture, right, which has been the case in all technological evolution, is the incumbents try to use regulation through payments to hold on to their monopolies or oligopolies. I get it, and it's always been that way, but this is really egregious, because if the only way you can have a stable coin is to run it through a centralized exchange, and then you're giving the governments back doors to seize, like when we seized the Russian assets, right? When they did something, I'm like, well, how can we just take a private citizen's assets because a government did something we don't like? That seems wrong. Like on every measure of wrongness, that seems wrong. Or when Canada froze the assets of private citizens who donated to the truckers. Or let's say that, like I say, a Democrat's in power and you donate to a Republican, they freeze your bank account because you didn't donate to the right party. Oh, that didn't happen yet. And so having the ability to knock on the door of the centralized authority and say, I'm going to take that, or I'm going to shut you down. That's what the Genius Act basically did. It said, if you want to play this game, you want to get rich, because Tether makes a lot of money. And look, if you hold your Bitcoins in cold storage, right? That right now is a legal activity. But the Clarity Act pushed it almost, like I think they tried to get language in there that said that would be illegal. Like that would make you a criminal. Like, how is actually owning my asset a criminal activity as opposed to giving it to the bank so they can use it? I don't know. It's a very, I'm not a fan of where Clarity ended up. And I'm with Brian. No bill is better than that bill. But I'm afraid they're going to continue to push it and they're going to get something passed, I think.
Yeah, I mean, right now it seems like there's some horse trading going on, Mark, right? Because I think, to your point, what you mentioned is spot on. What Brian really cares about is the stablecoin yields, where Coinbase reportedly in Q3 made $350 million from such yield, which could probably, in current state, go to zero, or not zero, but it would just go to the banks where it has been, right?
Yeah.
So it's one of those too, where, on the other side, you have Arjun from Kraken, not yet public, saying, oh, we need to have this regulation, right? Because it will favor some of those companies that are looking to have a little bit more structure. And I guess overall, if you could call this, Mark, maybe you buy this argument, maybe you don't, but more legislation might facilitate companies going public as there's some more favorability into this space. But to your point, if there's bad policies or incomplete policies, companies that are already public, like Coinbase, could face not just the $350 billion shortfall for these lack of revenues, which won't be there anymore, but potentially other challenges as those monies will be captured in private companies effectively, right? That can kind of operate in things like decentralized protocols, which don't necessarily have the same visibility as Coinbase.
Look, I think this is the issue of our age right now, that banking as we know it is, kind of on the verge of extinction. And that sucks if you're a bank, right? I mean, and everybody said, well, you can't have an economy without the banks. I'm like, look, I'm one of these interesting, speaking out of both sides of my mouth on this topic, which is that I get the Bitcoiners all pissed off because I say fractional reserve banking is a good thing. Like, I ask people all the time, name a country that does not have fractional reserve banking that you would live in. You can't do it, because the countries that don't have good functioning fractional reserve banking are kind of third, fourth world. And fractional reserve banking, everybody says, well, it's a Ponzi scheme. Sure, it is, in the sense that I deposit $1 and you take 90 cents and you lend it out, and then they deposit it, and then you keep doing that. And yeah, the money's not there. I got that point. But the money is circulating in the economy because I don't need all my money every day, every minute. every hour, right? I just need enough to buy my groceries or pay my mortgage or whatever it is. And then I want the rest working for me in terms of lending it out. And that's a good thing. And you can do that with Bitcoin. But oh no, rehypothecation's bad. I'm like, well, okay, but here's the thing. If all you want Bitcoin to be is you put it on a hard drive and you bury it in your backyard, we actually don't need that. We have gold to do that. We can bury gold in the backyard and use it as the core of money. We've been doing that for 5,000 years. I will argue that a digital form of that is better, and have been making this argument for almost a decade, that it's better, but you need to build a financial system on top of this new technology. Well, then what do the banks do? Well, either they adopt the technology and redo their infrastructure, or they get replaced. And either one is fine, but this regulatory capture, try to prevent the new technology, that's not good in any way, shape, or form.
Yeah, and I would just add on that point, Mark, I don't know if I'm freezing here or not. The connection isn't so strong.
You're back.
But I'll say that if we want to continue down the route, am I back? Okay. I'll say, if we continue down the route of the Sinister Saturdays, Mark, the idea of the Genius Act and a separate proposal was that there would provide some more clarity about stable coins from the auditing perspective, and having certain reserve requirements, amongst other things, having this strict 1-to-1 backing with high quality liquid assets like short dated US Treasury bills, which, folks like USDC and Tether would be required to hold substantial portions of that and reserves in US government debt. So that effectively, makes them amongst the largest, or would make them the largest institutional holders of T-bills. And so if you're thinking about that from the macro, then that will obviously reinforce stablecoins as this global distribution channel for US dollars, right? Which, could be a good thing, as non-US holders, are basically dealing in stablecoins that are actually backed by US sovereign debt. So, that web certainly gets a little bit interwoven. And if you're thinking about the Sinister, well, who would benefit from a weakening US dollar here, right? That's well, I'll leave the listeners to sit and marinate with that question.
Therein lies a huge issue on this, which is, the Chinese have a digital renminbi, and they are allowing interest to be earned on holdings of the digital yuan. So if you're a foreign nation and you're looking at your alternatives around the world, you can own digital assets in the US regime and get paid zero, according to this new bill, or you can own the digital renminbi and get paid. Now, it's not a lot, but it's something. Which would you choose? Well, you choose the digital renminbi probably. And I think a lot of this goes to a story that's really been developing for the better part of 15 plus years, which is China wants to be the world reserve currency, not just a world reserve currency, the world reserve currency. And I think what they figured out before we did was that it was going to be a digital version, not a, greenback or redback version paper. And I think they have an interesting lead. And you look around the world, you take the whole tariff war thing last year. Okay, we all feel good about it, and we're bragging about all the money we made from tariffs. Kind of, it's a little bit of an accounting gimmickry, but at the end of the day, China's trade surplus still grew dramatically. And all that happened was their trade with the US went down and their trade with everybody else surged. And so they became even more tightly woven with this global network than before. So I don't know.
Yeah. And maybe pulling on that thread, Mark, when it comes to tariffs on the AI side, we've seen this kind of battle go on back and forth between, what will be allowed to be ultimately sent to China, what will not be. And so the most recent news was a 25% tariff on advanced AI chips exported to China. And so we're talking about the NVIDIA H200, their advanced chip, the AMD MI325X. And all of those are the irony here. They're manufactured outside the US and they're routed through the US before they get exported over to China. And so, this is just more of the same, I think, Mark, right? Where it's very difficult to tax innovation. We saw this with DeepSeek. When you see kind of moves like this, Mark, how do you evaluate this? Do you evaluate this as a potential threat for NVIDIA because now there is a, necessity is the mother of invention where folks figure out more creative ways? Or does NVIDIA benefit here because they're still allowed to export to China? There's just, going to be an added fee here.
Yeah, look, I mean, at the end of the day, chips have to be manufactured somewhere. They can be designed anywhere. And really, NVIDIA is a leader in design, but they still are entirely dependent on the Taiwanese to manufacture. Now you say, well, but that's okay. So again, Taiwan ships them back to the U.S. and maybe they don't even ship them back to the U.S. Maybe they just, send them from Taiwan to China. But ultimately, the need for that middle step is trying to be obviated in China. Like China is slowly but surely moving manufacturing capacity up onto mainland China, and the interesting thing is at the smallest nanometer scale, it's still all about TSMC. But for all the other bigger scale chips, China doesn't need Taiwan. They don't need the US. They don't need Intel. They don't need AMD. They're manufacturing the bulk of them themselves. And so at some point, the technological innovation leaps that are being made in China are going to exacerbate this problem in that, and I'm not an engineer, so I can't explain it exactly right, but there's a process using light and lasers that etches the silicon so that you can put all the transistors in so you can make all the interconnects, right? And that process has been dominated by actually a European company. It's only like the third $500 billion company in Europe's history. Like Europe lags so far behind in technology. But ASML, so they dominate this lithography. So even Taiwan and everybody who wants to make these chips has to buy ASML machines. Super expensive, very technical. But there's been an innovation now in China where they claim they can now etch smaller nanometer scale chips, not using that same EUV technology. Well, that would be a big problem for the monopoly that has been ASML and TSMC. And so I think that's a long-winded way of saying in the short run, we can play these silly games with the tariffs on, if China, if you want these chips, you have to pay us extra. Okay, that's the opposite of free and open trade and good global markets. But Huawei will, not might, but they will eventually have a chip that competes with and or exceeds the chips that they're having to now buy from Nvidia. And look, the story came out in December that the DeepSeek thing was all a lie, and they didn't really spend so little money, and they really did use a whole bunch of chips. I don't know. I wasn't there. So we have to listen to the reporters. But let's say it was all NVIDIA chips, and let's say it was the new chips. It wasn't just the old chips. And let's say they spent lots of money because the Huawei chip couldn't do what they claimed it did. Maybe that's true. Maybe it's not. I don't know. But let's say it is true. Tomorrow, it probably won't be true. And the next day, it'll be different. And so the technological leapfrogging that's going to continue to happen is going to drive this much more than the grandstanding over tariffs.
Yeah, it wouldn't be a sinister Saturday, Mark, if we didn't have a theory that would explain why the powers that be slow down our internet. My new prevailing theory is the battery power was running low because there was just so much amazing thoughts that were happening on the podcast. As soon as I was able to plug it back in, the camera gets better, the light gets better, and my notes reappear on the screen.
Incredible.
So as we're incredible. The grid just needed their task. So to that point, Mark, as we're kind of looping back some topics, as we think about kind of global trade and what's going to happen with tariffs, Taiwan immediately interjected with, I'm not sure if this is a gift or a pay forward. I'll let you think about what that means, Mark. Is Taiwan, they've committed toward $250 billion in the U.S. semiconductor industry. Some would argue, is Taiwan already part of the U.S. Semiconductor industry? So really, where is that money going? But the idea here is that, this will be deployed across a couple different sectors: energy, AI production, and this would basically guarantee further support from the U.S., although the exact terms were not.
No,
I love those kinds of reports. It's like,
we've all seen it. It's the circular, and someone said this the other day. It's like our entire economy in the United States is like 7 or 8 companies sending an imaginary $1 trillion back and forth. Like every day we get another announcement. Like the latest is, OpenAI with Cerebras, and like our company, our portfolio, Grok, gets acquired by NVIDIA. And so Grok LPUs, because Google has the TPUs, starts to go down this other path. And so OpenAI, so hey, we have to be top of news. So we'll do something with Cerebras. Like, well, the Cerebras chip, it works kind of. I mean, it's this giant wafer scale thing, and the problem is it heats up so much and it cracks, and it hasn't really been very consistent. But hey, we're going to give you $10 billion. But Sam, you don't have the 10 billion that you were going to send to Oracle, or the 10 billion that you were going to send to AMD, or the 10 billion. Where's the money? Like, well, I don't ever have to send the money. I just say I'm going to do it. And then someone says they're going to send me money to use my system. But I saw 2 charts that should cause Sam some sleepless nights. One was the dollar price per token of all the different models was, it was a 45-degree decline. Serious decline. And that's kind of like Moore's Law, right? Compute, my first computer, I spent like $3,000 for, and now I can get 100 times better computer for less than $1,000. So the price continued to decline. So that's the first problem. So you used to be able to charge a lot for your tokens, but now you can't, because it's becoming commoditized and ubiquitized. The second chart that should give him pause is he used to have 85% market share of chatbot users, and now he's down to 30, and Anthropic is at 35. So he's not number one, and he's not number one by a mile anymore. Now he's number 2. And, it's like the, number 1 with a bullet from the music. Like the Billboard charts, he doesn't have the bullet going up. He's got the red line going down. So all the others, Google and others, are rising, and OpenAI is falling. And look, I'm I'm that guy, right? I've never paid OpenAI $1. I use the free product until it tells me I've used my limit, and then I go to something else, whether it's Grok or DeepSeek. DeepSeek's my fave, and until they arrest me for using a Chinese product, I'll continue to do it. The real reason I like DeepSeek, honestly, is I don't love the fact that all of these companies are storing all of the chats, right? Oh, it'll never be used against you. I'm not certain of that, right? I'm not certain that if I ask it, like, tragically, I have a friend who is struggling with GBM. And so I've been doing a lot of research on glioblastoma. And it doesn't know I'm doing it for a friend, right? So what happens if I go to apply for insurance and suddenly my insurance rates have gone up a lot? Well, why would that be? Well, you have a pre-existing condition. I go, I don't. I mean, and so I actually do it all in DeepSeek because I'm like, maybe the Chinese aren't keeping my data quite as much as the US firms. So.
No, I think that we spoke about that, Mark, on the way back onto the airport. We split a cab about things that some of the LLMs are good for and they're not. So privacy, I don't think anybody would put that into the list of things to get at. Also music, which is what we spoke a lot about. Terrible for music composition or analysis of your favorite song. So there still gives us humans, two-legged beings, a possibility to have employment into the next year.
Just one point on that, on music that is interesting, because you're a real musician. I'm an aspiring musician. But what I think is so interesting is essentially, now there's more than 4 chords, but there's basically this 4-chord progression that's in thousands of songs. And there's a lawsuit about it, and someone tried to patent it, and no, it's like A, T, C, and G. All of life. Think about this. All of life comes from 4 elements: A, T, C, and G. All of it. And you can combine A, T, C, and G in so many different ways across so many different patterns in DNA. Same thing with those 4 notes in music. And you can so it's the human spark of creativity that makes the music. And like even the silly thing like a pause in your strumming pattern can totally change a song. Like I'm playing the same note on the same instrument, and yet it sounds totally different between song A, song B, song C because of the pause in the strum. It's the same finger. It's just mind-boggling to me.
Yeah, I think that, it's one thing, Mark, we'll make 2026 the year of the 4-note chord for you, the 4-note chord. So we mentioned that you've got the major is 3 notes and the minor is 3 notes, but with a flat. So we'll get you the 4-note, and then you can see the breath. I think that's what you can describe, the breath getting blown into the music. But as we kind of mentioned on the piece that, will give us employment on the creativity side, that humans are not going to be irrelevant. In the chart of the week, we explore this specifically on what that means for AI spending. And we've done a lot of these. And I think it's important that we kind of take a look at, the latest numbers. There's some that we agree with. There's some that are just way wrong.
Yeah.
And we've kind of called those out when we see those. This one, I think, is somewhat in the ballpark, Mark, and I'm curious to hear your opinion on it. I will share my screen, hopefully now with more power. My machine will cooperate. And let me know when this pops up for you, as I will share this, and we will dive in about the latest from Gartner. And let me set this up by saying that the forecasts are in, and if you expected there to be a very large increase in projected AI spending, you would be right. So that is up to 2.5 trillion with a T this year. which is a 44% year-over-year increase. And I think this is the money quote for me, right? So we know that this is going to be some circular stuff that we've described, right? Where one company's working with another and somehow that counts twice. Don't ask me why, but it does. But I think the idea here is that some folks are starting to get a little bit savvier, and they're kind of shifting towards using AI to be organizationally ready and having sort of enterprise purchases. We've been seeing a lot more portfolio companies that are working with enterprises. And here is kind of a cut as some of those companies or industries that fit into the companies, and kind of what are some of these projected numbers according to, a respected source like Gardner Mark. Does this look directionally right to you? What is your gut?
Yeah, look, I do think it's a huge amount of double or treble or quadruple counting, but directionally, absolutely, right? I mean, take the AI data, right? We go from 827 or 627 million to 3.2 billion. Yeah, I mean, AI data is becoming an increasingly large business. Those numbers sound
for sure
reasonable to me, right? The jump from a trillion, so supposedly $1 trillion was spent on AI infrastructure. Oh, okay. I mean, think about $1 trillion for a second. I mean, $1 trillion is it's $1 every second for 31,710 years. So think about, okay, where did that go? Okay, it's chips, it's the actual data centers themselves, and I know there's been a lot of talk about creating these big data centers and a lot of talk about creating these new nuclear power plants, but last time I checked, there are no nuclear power plants, like literally none. And I'm not sure these data centers are even remotely close to complete, but they count them nonetheless. Yeah. And then you think, well, okay, we're going to spend another $1 trillion. And part of it is if the companies, if NVIDIA just keeps jacking up the price of the chip, right? The chip, was 20,000, then it was 40,000, then it's 60,000, then it's 80,000. Okay, so that's one way to grow. But if you're paying for those chips later, this is my knock about the circular thing, is they're like, well, we're going to buy some chips, but we're not going to pay you now. We're going to invest in the company, and then you invest in us, and then we'll settle up later. Like, well, okay, but if the money's not actually changing hands, how are we recording it as revenue? But we are. And then there's the whole accelerated depreciation issue. But look, do I think that I'm looking at the AI services, 40% growth in use of AI services is going to happen this year? Yeah, I probably don't. I think enterprises adopted it. They bought a lot of seat licenses. I think at least what we're hearing from companies is they're not getting the benefit they thought they were going to get. Although I will say the McKinsey guy blew me away. He's like, well, we have 20,000 agentic employees. And he actually called them employees. So, I mean, this is weird, right?
Wow.
He's like, we have 40,000 human employees and we have 20,000 agentic employees. I'm like, employees? Like really? You're billing out agents to your customers? Like, really? I mean, that was interesting. I'd never heard it phrased that way.
That bad Mark is counting your Facebook friends.
There you go.
Friends,
that's a perfect analogy. Yes.
It's like 13,000 friends. It's like, no, you have, maybe 15 people that you actually know, and then half the number are bots, and then the other half are in them. But, kind of to unpack some of the numbers that you went through, Mark, within this, one thing that kind of made some sense to me was, if you're thinking about infrastructure, which is, the biggest line item here, as a big driver of growth, a lot of that, in addition to some of the new stuff that's going to get built from the ground up, this is where a lot of the money is coming from, is the retrofitting
Right.
or the increase in the AI optimized server. So that's exactly what you're saying about how, the NVIDIA chips are going to be each year more expensive than the last. You need the better chips to compete. The orders come in from the hyperscalers, and boom, they have to live somewhere, in Secaucus, New Jersey, to service, lower Manhattan. So, we're starting to see some of that. And I think, this is one of those things where the numbers it'll be difficult to shake them out. But I think what is pretty apparent is it's going to continue to be a big driver in 2026, whether you're thinking about, public valuations of stocks, private valuations of companies. And, we as a firm have been, I'd say, very methodical in recognizing that the greatest value is on the early stage if you're principled and if you find that enterprise use case. So now we're hearing that come from the top, where this drive is coming from organizational readiness and proven return on investment.
Yeah.
So we'll see if Gartner, how right they are, Mark. We'll do a postmortem of that.
And the last thing I'll leave you with is there's a little bit of actualization in this, and Gartner's been doing this forever, right? They are always ebullient about the future of technology, and in some ways, if you create such a big future market, the market will start to create. Like if you tell yourself all the time, well, I'm bad at this, you'll probably end up being bad at it, right? If you tell yourself, I'm good at this, maybe you'll become good at it. Likely you could become good at it with enough practice, but it's just a better way to run a consulting business, to be optimistic instead of pessimistic. So, I don't know that anyone's ever audited the Gartner numbers. Maybe someone has, to go back and say, did they actually come close? And in some cases, they probably did. In some cases, they might have been even under, optimistic, and where things just went totally parabolic. But my guess is, generally speaking, if you restated the numbers later, they'd probably not be quite as robust. Maybe, I don't know, just a theory.
Yeah. So we'll kind of let the audience decide that if where they fall on the spectrum, and we'll also have to thank our listeners as always for tuning in week after week. And I think we tilted more toward the Sinister Saturday, which I like. Every now and then you have to spice some things up and just tell it how it is. Enjoy the college football. I know, Mark, it won't be on in your house.
That's right. That's right. I vowed I wasn't going to, although I did break that. I said I wasn't going to watch, but the last couple of games were actually pretty good. So, this one I think will be good too.
Yeah.
All right.
Awesome. Well, we'll kind of end it there and say to rate, review, subscribe, and to thank all of our listeners for tuning in and to stay current.
All right. Have a good one.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.